Oftentimes, you will hear people stating that history will repeat itself. And some people will say, you know what, no, it's not that it repeats, but more so rhymes more than anything. And I've been doing this comparison of the current rally that started back in August of 2010 and the rally from 1979 in the same market, which is that of silver. And in 1979, it ended up gaining 700%, or that of an eightfold gain. And it was a very, very impressive rally, but the majority of the rally it endured was near the end. It really made three big size moves. You had the original one. I really can't count that. It really picked off rightfully around here. And it went into a pattern. This is a wedge kind of pattern, and well, it broke above it. And then it had monstrous gains and another little wedgy pattern here, and another explosive gain towards the upside. Now, as far as the times back in the 1970s with today, can we make any more comparisons? It was unusual times, to say the least, as it's unusual today. And when we look at what's been going on recently, it started off pretty similar, but the difference here, it sold off here, continued to rally here. And because of that, it's started off of the gate doing better than it did in 1979. Also, when we do comparisons, we can see that it pretty much topped roughly around the same point of view in here. And it had a retracement. Here we had a retracement, and here we had a retracement. Now, if it continues going at its same direction, then the market will sell off for a short period of time, because we can see in here that it had a decent sized sell-off. But like I say, a lot of times history doesn't repeat itself. I guess more so maybe it would rhyme. And what I've been showing a lot is the upside for Fibonacci, which calculates the lows of $4 and the highs of $8. I've said this many times. When we get above this here, it was more of a Fibonacci fail. No. I mean, because you're supposed to find resistance at this level, but it's not a fail that it didn't find resistance, because if that's the case, then you oftentimes would just go up to the next one, which is what happened. And then here it found resistance. Here, well, it was 12 cents on an intraday level short of this level. This is $31.40 US. When the year started in 2011, it came up to 31.28. That's a 12-cent difference. But it only sold off down to this level. That's a pretty weak sell-off when you see how big this rally is. And now that it's only had a small retracement, the odds of breaking this level is pretty decent. And just like the theory in here, if there's no or very little resistance at a significant Fibonacci level, then, well, a lot of times you burst through to the next level. And the next level is up to $48 and change. Because when we hit this level here, it sold off pretty harshly down to the next level. In here, it sold off pretty harshly to this range, and then it fell down lower. Here, it fell down and, well, it came back up. So realistically, the odds are pretty much a guarantee on so many levels that we're going to come up to this point here. I'll explain near the end of the video why that's going to be the case, why it's pretty much a guarantee. So we're going to move this on, same chart, but we'll make it a candlestick chart instead. And it's the same weekly chart, not as many periods or days, but what we'll do is we will do some fun with making different lines on here. So what we'll start off with is we'll draw a trend line towards the top of 31.28. We'll figure out the size of the rally that it had. We'll compare the top to the bottom from the breakout back in August. Now what we're going to do is match the size within this bottom. If we have the same length of rally that we had back in August, that would give us a price objective roughly, well, below this 48.77, and if just by eyeballing it, it looks like around 47, 46 and change. If, of course, we match this rally that we endured in the fall of 2010. Now what we'll do is we will do some trend line analysis. So we'll look at some support areas, and when we connect support and resistance lines, what the thing you want to do is you want to connect as many significant tops and bottoms that you can. And when we look at this trend line in here, I want to make it a bit bigger, but we connect many different key points. You can see 4 different hits on that level. So what I like to do is I like to use parallel lines. And it's fairly easy to do it on this program. I can just draw over and move the line over. And well, we can see here that we had a hit here, here, and for a decent amount of time in there, making it a very legit trend line. But what's very interesting is it got above that level last year, and our most recent bottom of 26.30, it found support at that level. Whenever you are in a range, a channel like this, and you break the channel to the upside, you come back down to the channel's resistance line, find support on it rather than resistance, and then come back to where you were in here, man, that's screaming for some big moves towards the upside. And let's continue on making these parallel lines. We'll make another one, find which ones seem very legit or the most legit along the way. And I guess it's not as easy as it was before, but you'd have to think, if you go by distance anyway, that you know, I'm going to forget about that for now. But there are more trend lines that are valid on this chart that I was doing earlier today. And for example, you have one like this. All I'm doing here is connecting this bottom with this bottom. That's it. It didn't find support here. It came close to finding resistance there, but not really. It got above it here, found support here, and again on there. So that's a very, very bullish case. Now, if we draw a parallel line within the same one and try to find a level of resistance with it, we can. This one here is a pretty decent one because you're connecting 3 key tops, but the problem here is the only way that I can connect the tops of 2006 and 2008 is if I draw it with a different angle, which is fine, but that would be a future level that may encounter just a little bit of resistance, but we'll wait and see anyway. Enough on the weekly chart. We're going to move this on to the monthly chart. And that trend line that I wanted to show, the main one, is better on this one because there's more days. I'll use an orange colored line. And that's the trend line that connects these periods, or this one in here. Because within this trend line here, it found support. It broke through it, but it couldn't hold. Had a nice little gain in here. Support, broke through it. Resistance, and it's broken through it. We haven't had support at this level, and it doesn't have to happen, because if a major level of resistance was always supposed to find support, well, I'm still waiting for the Dow Jones to find support at 1,000, or even for that matter, gold to find support at 1,000. But like I say, it is a very bullish sign that it is getting above that key level. That doesn't, well, I guess I was going to say that doesn't look too parallel to me, but I guess it's one of the most decent trend lines that's going to connect this level, and this level together as an area of potential resistance towards this channel anyway. Now, as far as what the candles are showing us and on the recent area anyway, what's encouraging here is when you look at what happened, you had a nice little run up here, sideways consolidation, nice run up, sideways consolidation. It was really long back in 2010. But since that last sideways consolidation, you had a breakout candle, a continuation rally, and within that, we've now had three candles that have really consolidated from time since a three candle upward tick. And within the three candle consolidation, you have an uptick, downtick, and an uptick. When you see these formation with these three candles, with anything looking like we see here, that's very, very strong because it's saying that the sellers tried to come in, but they weren't able to. And a lot of times, all that means is that there was a little bit of profit taking. People who were getting in these longs positions, they had a nice 50%, 40%, 60%, whatever percentage gain, and they wanted to exit out of their positions for a profit. But there's a lot of people who are refusing to sell, especially within the physical bullion, because they know what's coming and they know that at 30, come on, that's still a little too cheap. We're going to move on to the quarterly now, and it's a matter of when we get up to 50. Total matter of when. And when that happens, you're going to hear within mainstream channels like CNBC and whatever, I don't know, you'll hear that we are at a 31-year high. Levels not seen since 1980. And basically, you'll hear the word silver more than you did before. You'll hear the name Hunt Brothers, sort of like you had before. Now, what we can do with this is talk a little bit about Fibonacci. If you've been following what I've been stating, then I'm going to say the same similar thing, because what happened within silver, and I don't, offhand right now, I don't got the daily chart on me, but whenever you have a gain like this and then it sells off, well, here's the deal. As you see it rallying in here, if it doesn't, this is like say a 61.8%. If it goes there and goes lower, then this selling is very much legit. However, if it say goes above it, all of a sudden now you're like, okay, wait a second, this selling's a failure. And when you can get confirmation that it is, then you know you're at least going to test those highs. That's why I was stating for so long that we had an appointment with 31 and a quarter upwards to 31 and a fifth, up to 31.50. So that happened. Well, we got an appointment very soon with $50 per ounce. That's pretty much a guarantee. And you can say that on a fundamental basis, but even on a technical level. Now, as far as the Fibonacci is concerned, what you do is you calculate the highs from in here and the lows from in here. And that level from just past memory worked out to somewhere of around 18 offhand on an exponential level. Somewhere around here. And what happened was it found resistance, came back lower, but confirmation really came in here. And because of that, that means that all of this selling is a failure. And because of that, the odds that it goes to the previous resistance point, which is 50, is exceptionally high. And as far as just candle analysis on this one, you have the wave lower, and then 1, 2, 3, 3 candles higher. A consolidation in here. These 3 candles in here, let me take the blackness. These 3 candles are consolidation candles, but the kicker is is it's in an upward trend. That's extremely strong. And then you break it with these two major candles. And this one here, which is known as a hammer candle, I call it a cattail. But that's where you have, it looks something like, just as it shows, something like that. That's where you start. Obviously, you should always open where it closes. But it comes down lower, as you've seen it does, as it did here, and then it comes back to where it was, and it's pretty close to where it opened. That's an extremely bullish one. As the opposite, if it, say you have a candle that looks something like this, that's bearish. But in this situation here, that's an extremely bullish scenario. Now, as far as I'm not too good at drawing on this thing, but this chart is mainly a bowl formation. I don't know, you can even maybe throw in a few different cool different things in here, but that's just a little smiley face, of course. But nonetheless, this again is another strong formation for the markets to go up towards the upside. Now, I'm going to pretty much finish this presentation off right now, but when I talk about this being extremely bullish, I mean this in a physical way. I mean it on a physical way, not within the paper contracts, but within the actual physical bullion, whether it's bars, rounds, the 1 ounce, the 10 ounce, the 100 ounce. It really doesn't matter too much on that. But if you take a ETF contract of SLV, and they probably don't have as much silver as they should, you're going to have a very, very difficult time by taking those shares and developing solar panels, catalytic converters, which silver they can do. They can make t-shirts or shirts out of silver. It's hard to do that with your paper COMEX contracts. And I don't know exactly what the net result's going to be within the physical versus the paper, but it doesn't seem as if it's going to be the most exciting thing for those people who are buying paper silver, paper gold for protection within hyperinflation. And that's my opinion, and I know many people share the same one. So I'd like to thank you for watching this. Take care.